In this video, we're going to talk about how to trade unusual options activity. Specifically, one trick that's going to help you have less losses and more winning trades by doing this one trick. This is something that I learned as a professional, and it is a trick or a technique that I often don't see retail traders or a lot of traders utilizing. So this is what we're going to cover in this video, and I have a real case study, a real trade, real money trade that we're going to cover and talk specifically about that. So take a look here. We're looking at the data for December 20th, 2021. And the reason why we're talking about this is the trade that we had here. So we had a trade that we saw this activity in the December 23 expiration that has 3 days to expire. And we saw this positioning early in the morning and later into the afternoon, where we had 22,483 contracts traded in this 21 strike here. So this volume exceeds open interest, and also if we looked at the time and sales, which I don't have up here right here, but this was opening activity. This was an alert that I sent out to my Hot Money Trader subscribers. And what we're looking for with Hot Money is short-term positioning for big gains, where we're looking at something in a short term because there's probably a catalyst. It's probably catalyst driven, situational based, that some kind of news or something's going to come out to pop shares higher, which is exactly what we saw here with Norwegian Cruise Line, where we saw a big move higher here. So on this day as well, which was interesting, is that the stock was in the green. This is not necessarily always the situation, but it was interesting because this stock traded higher on a day where the market was lower. So we had this positioning here, and if we just come into today, you could see that 15,000 contracts, so about 13,000 of those contracts did add to that 21 strike there. So those were adding positions, and that's how we know that there were positions being put on. So if we take a look here at the chart here, you can see where it gap lower and then continue to hold up here. So buyers were holding that bid there, and then today, this is that action here on today. We got a gap and go, and this was a stock that was up from the close to the high, was up about 8% on the day, but the options that we saw, that we picked up on, were up 2 to 3-fold. So we're going to take a look at those options right now, and this is what we're going to cover here. This is the technique, and this is what I want to be able to provide this insight to you in this video here. So we got this. That's where the big volume came in here at 9:15, so shortly right after the open, and we got a big buyer coming in here, and then you see some accumulation, two-sided trading, and then this is where I started to build a position here. So the one trick that I can help you be able to have less losses when it comes to trading options, and you can use this with stock as well, or any kind of trading instrument vehicle, is to scale into your position and to scale out of your position. And this is something that's often overlooked. Now, it's harder to do with smaller accounts because, let's say you're just buying one contract. Well, you kind of have to pick your battles. But if you have a bigger contract and you have and your position size, which is always the essential part, position size first, know how much you want to risk, and then you start to build your position. And this is the strategic way of being successful trading options. So with this one, I didn't get filled on my full position here, unfortunately. I was trying to work here. You can see within 30 minutes, I'm trying to work an order in. So I got 2 filled here, 2 filled here, and I didn't get the rest filled. I actually didn't keep an eye on this one, and this one got away towards the late afternoon. And sometimes we don't see it where it gaps higher like this. Sometimes you get a little bit of a pullback, and you can see how the bid offer or how the options fluctuate, especially on something that is shorter term. So I was assuming that I could get some on the open and then maybe see it pop higher. We had a gap and go, and here you see this is where I start to sell into it. So if we looked at a 5-minute here, and actually we'll just look at a 1 minute, and I'm going to do a 1 minute, and then 1 day 1 minute. So we get that pop, and then we can move up higher here. Now, when we're trading options, and this is the other thing, we don't know. It's a derivative of what we're utilizing, which is on this one equity based. It's never going to be clear on. We have levels that we watch on the stock, but the option prices are going to fluctuate. And you can see here we get a pop, trade a little bit sideways, and we get another pop higher here. So because that momentum here, I sold initially into it. So I scaled in, and this is where I start to scale out. Now, I would have different layers if I got filled on the rest of the position, or if I got filled at different prices. Let's say I got filled at 30 cents on some of the other ones in the morning, and then they popped up higher. I would have different targets, and that's how I would start to manage my position, executing on those orders that I got in at and hitting those levels, creating a scale of profit opportunity. So here I scaled in this position, and ideally would have had more contracts to be able to get into for an overall average price, but have different tranches, different prices that I got in. And on the exit here, this is where I start to layer out those positions. So here, I'm selling at 75 cents. I got filled at one contract. I had two at 80 cents, which got filled at as well. And if we just look here, this is minute by minute basis. So sometimes we get the pop higher, and then we've seen it before where it fades back. So it's not really about the dollar amount, it's about the percentage based. And percentages are what we focus on, not really the dollar amount. Dollars go into the bank account, it matters. But when it comes to trading, you have to focus on percentages. So here, I'm focused on percentages. Overnight, we're looking at percentages, and these are great percentages from when I got filled and now when I'm getting out. So here at 80 cents, we get filled on two here, and then I let the last one here as a runner. How long you let that run for? Well, obviously I should have let that run a lot longer here. But all this extra stuff here, we don't know about. You know, we're trying to sell into a move and take as much profit as we possibly can, but we don't know when that turns. And this is a good example here. So sure, I got in. I could have sold here, and if I held it on for a little bit longer at 126. So here, let's say we're having this runner, or you have a position and you're holding on to it. You didn't sell any of that. You go from 126 and you drop all the way down within minutes to 97 cents. What do? That's nearly 30 cents of a drop. What do? You have a stop loss here. This is how to create more consistency on your options trades, because you alleviate that fear and that stress of, what do I do? We already sold out of it. Sure, we could have gotten a better price, but if you had a position on here and you didn't sell into it, or it didn't go as high, it starts to scale back. This is how you avoid that. We're never going to pick the top completely, and you're never going to get the bottom completely as well. What we want to do is we want to get as much as we possibly can. Ideally, 80% of the move. So I had the runner here, and because I didn't have a big enough position, I just said, yeah, I'm not even gonna worry about it now, because I wasn't able to get into it, and I wasn't able to get a meaningful position that's gonna make and allow me to focus my attention onto it. Find something else that's gonna make me more money. So here we hit a high of 145, but you can see here the variances. Now, this is the other part of this as well. If you have a position like this and you have some meaningful positions, this would have created some good opportunity to trade amongst it, to trade the options. If this was a little bit shorter term, I would have loved to trade this a little bit more, because there was some good opportunities to get into it and to sell higher here. But this was an interesting stock, being the fact that it was strong, and you had a good back and forth here, and we had a good pop higher here. So they hit $1.45, and at that point, you fall back here. So, trading options are fun, exciting, and frustrating. And the way to take out that frustrating and make it more fun is to do exactly this trick here. And that trick is just simple order entry, averaging in and averaging out. It's the best way that is going to create the most consistency. You focus on percentages, not dollar amounts. And here is how you have more trades that go in your favor, because now you're getting in at better prices, and the risk that we manage here is what we're positioned as. We have a position size that we're going to put on, and it's going to be enough that it's not going to destroy us, and it's enough to be meaningful. This one wasn't that meaningful here, but I would have liked to have the opportunity to get in, to get out. And this is the issue that a lot of people have, is that they will just buy all at once and then try to sell it all at once. Sure, you can do that, but a lot of times you're going to have a lot of variances that happen where you're not going to be able to have the nice getting in at a nice average price. You may get in at higher. You may not you may not get your full position. You know, ideally here, if we had more time, more focus on this, and a little bit looking at this a little bit more, I could have possibly scaled into this. Now, when we look at the overall chart on this one, on the daily chart, at this point, we're coming into, and this is a daily chart, so we have some overhead resistance here. So we did get a gap higher, we got close here, and then we have this moving average here, which is the 21-day, which is a moving average that has been resistance, was resistance here, was resistance there, some resistance as well when it broke through there. So we have to get through there, so that's resistance at that point. We do have some overhead here, and we also have this form of resistance at these levels as well. So those are levels that I'm looking to sell into on the stock chart. And sure, the premiums could be different because you can have a surge of volatility come into play that helps benefit. And there's a lot of that's the main fluctuation in the premium on there with the delta. But you know, there's a bit of a trade-off when you trade an option versus trade the equity, which is a lot cleaner. But these are levels that we look into, or what I'm looking at to sell into. And sure, you can have the runner, you can run higher, but now you have time decay. So we got the move, you get in, you get out. And that's really what we trade hot money based off of. And this is that technique that I try to encourage every trader to utilize. It takes more time, it takes more focus, unfortunately. They're just buying and then just selling. But if you want to have more consistency, if you want to have better profits, if you want to have less losing positions, this is the way to do it. Now, you don't average in, you don't put more money after a bad trade. You have your position size, that's what you risk. But once you get to that position size and you get your average price in, then it's over. You don't keep adding into a bad trade. You go on to the next trade. So that's what I have for you. This is part of a series I'm going to put together on trading, how to trade unusual option activity. But this is the most important is your entry and your exit. And there's a ton of unusual option activity. You can use this any way possible, trading options, trading futures, trading stocks, trading Forex, trading anything. Don't buy all at once. You average in. You have to average in. And you average out to be able to know when you can get the most and maximize your profits. So that's what I have for you in this video. And hopefully this is going to be something that you can start utilizing tomorrow and have less losses and more profits. Let me know below, and let me know if this is something that you knew about, you didn't know about, you've been utilizing, or it's a aha moment. Let me know in the comments below, and I'll talk to you in the next video.